So let's talk about the New York City real estate market. After a quieter than normal third quarter, the fourth quarter saw a burst of activity. But what is 2025 going to look like now that interest rates are getting back towards 7%? Well, before we get there, let's first take a look at the fourth quarter data.
Manhattan had nearly 2,700 closings. That's up 3% from the previous year. We also saw nearly 3,000 new contracts signed, up 12% from the third quarter.
As far as inventory goes, the fourth quarter was 9% lower than what we saw in the third quarter. And in fact, we're at the lowest inventory levels we've seen since Q1 of 2017. Now, part of this is due to the fact that there was just a lower volume of new listings hitting the market in the fourth quarter.
So now we are approximately at 116 days on the market, which is up 6% compared to the previous quarter. Average price per square foot is sitting at about $1,811 price per square foot, up just a bit, 4% from third quarter.
Now we're going to shift gears and go to Brooklyn and talk about closed sales. We actually dropped in closed activity, down about 22% to just over 1,100 sales in Brooklyn. Now for contracts signed, we actually went up 13% to 894. And in fact, this was the busiest fourth quarter we've seen since 2021.
Active listings rose 13% from this time last year, which sounds promising, but we are actually down 21% from just the third quarter. Some of the largest inventory gains were seen in South Brooklyn, and some of the largest drops were in Brooklyn Heights, Dumbo, and downtown Brooklyn, largely due to fewer developments hitting the market.
As a whole, Brooklyn is averaging about 85 days on market, and even quicker timelines at price points at $750K and below. But as a whole, in about the last 3 years or so, we really haven't seen time of the market be any higher than 90 days.
Overall, the New York City market saw lower prices, fresh inventory, and rising confidence throughout last part of 2024. Adding to the fuel, we also saw a dip in mortgage rates.
And that's where 2025 is likely to be different. Here in our market, we're already seeing 30-year jumbo loans approaching 7% again. And all throughout 2024, a lot of economists were talking about interest rates slowly going downward as we head through 2025. That's likely not going to happen. So now we have to wonder, will buyers still remain active by seeing new inventory hit the market that's better priced to begin with?
So let's connect to see how we could make the most of your 2025 purchase or sale.